we're going to need an increase in budget spending for cybersecurity.
It's a trend we're already starting to see with Google's $32 billion cybersecurity purchase just this week.
Well, right now, you can see price targets being increased by Wall Street analysts, calling for double-digit upside.
Our MarketBeat analyst Gabriel Osorio-Mazilli shares his 3 growth stocks in the cybersecurity field that are set to take off with rising demand. Let's dive in. So Gabriel, a lot of buzz surrounding cybersecurity this week, all because of that big Google purchase.
This was a unexpected $32 billion purchase made by Google and his new up-and-comer cybersecurity stock named Wiz. What's behind this purchase? It's actually bigger than just Wiz. It might affect every other stock in the cybersecurity sector for reasons that will become clear in just a minute.
Let's talk about this, Gabriel. Why does this purchase impact the entire cybersecurity sector? And what does it tell investors right now about what's going on in this sector?
Well, this is one of those unorthodox indicators that most investors don't even look at. The opposite would be a market filled with IPOs, right? So initial public offerings when private companies choose to go public because the market's hype or the market's buzz around the specific sector or overall valuations are beneficial to going public. Now, the opposite would be when you see a big company like Google engaging in mergers or acquisitions in other names, right? That might mean to investors that valuations are at the lower end of the range and are beneficial for buyers today. So more than just Google getting into cybersecurity, which makes sense being one of the biggest technology names in the industry. More than that, it means that perhaps all of these cybersecurity names today are seeing a lower valuation range than usual, making them great buys for investors.
Yeah, that's a really interesting perspective to look at this. And I think logically, it also just makes sense that cybersecurity is just going to increase in demand as we see other advances in technology.
Right, that's going to be one of those no-brainer trades in a matter of years from now. So the reason is, I think, because the digitization of the economy means that as more and more businesses go online and more commerce and more business activity goes in the online economy of today, you're going to have to implement some sort of security measures. And that is where cybersecurity comes in. Anywhere from client data to payment data, banking, and other critical and confidential information is going to require services from these cybersecurity companies. And all that demand is just getting started today.
Yeah, that's a really great point, and why you have a list for us today on 3 stocks in the cybersecurity sector that are already seeing some buzz thanks to this recent Google purchase and a lot of those factors you just mentioned.
Right, and the first name on that list would be CrowdStrike. Now, everybody knows this company as the one that caused a outage in Delta Airlines last year. The stock hasn't really recovered from that fiasco, but the reasons behind that incident have been taken care of. Immediately, management, everybody went in and fixed it right away within the same week. But as you know, the market's memory for bad news tends to stick around more than for the good news. So despite all that, we still see a lot of institutional buying, a lot of Wall Street bullishness going around CrowdStrike today. And I think that those are founded on pretty significant tailwinds, such as the Google purchase, such as low valuations, and such as the market's tendency today to seek better risk to reward ratios as the S&P 500 goes in a volatility increase.
How long can it take a stock like CrowdStrike to fully recover after a bad news event?
Nobody can really tell. That would be like having a crystal ball and telling you when the stock might recover. But I think that is the more volatility hits the broader industry, the broader sector, the broader stock market, the more interest there will be for stocks like CrowdStrike that offer a fantastic risk to reward ratio. So right now you can see price targets being increased by Wall Street analysts, calling for double-digit upside. I believe the highest one right now calls for 13% upside from where the stock trades today. Not to mention recent increases in institutional buying, as well as increased momentum in the stock over the past month.
It makes it an interesting pick in cybersecurity for sure. And like you said, a good risk versus reward. Let's move on to your second stock pick in the list of 3 cybersecurity stocks set to see some buzz now.
The second name in this list is one that pretty much everyone knows about, and that is Oracle. Now, the main thing that caught my attention in the stock was the 10.1% decrease in short interest, and that's over the past month alone. That's a clear sign of bearish capitulation in the face of all these bullish tailwinds happening in cybersecurity. Now, just like all the other names in this list, Oracle has also seen more institutional buying and more bullishness coming out of Wall Street. Not to mention, Oracle trades at a price to book premium compared to the rest of the computer sector. So, if you recall our video on SMCI and how that stock was trading at a premium compared to peers, and the near triple on the money that investors got out of that stock, I believe the same factors are at play today for Oracle as the cybersecurity industry becomes more important, as bigger players like Google start getting into it. I think the market has a pretty good reason to pay a premium for Oracle. Now, investors now have a choice. They could either wait and see what that reason is, or they could start backing up the stock as other institutional buyers are, and then find out later once they're sitting in profit.
Let's look at what analysts are saying about Oracle right now, too. Where's the stock at today, and where do they think it could go in the next year?
So when investors go and check what Wall Street analysts are saying about Oracle today, they'll find a 179 price target as the consensus. That means double-digit upside from where the stock is today, which by the way is only 78% of the stock's 52-week high. Now, according to Wall Street, a bear market or bearish territory is a 20% or more decline from recent highs. And Oracle, at again 78% of 52-week highs, starts to fit that bearish territory and again making it a fantastic risk to reward ratio for those looking for value today, especially in cybersecurity.
I do think there's something to point out too about the cybersecurity field. Even though it's seen a downturn like the rest of the market right now, cybersecurity isn't necessarily a luxury item. It's not a want item. It's one of those very essential services that any company looking to grow is going to need in the future too.
Some might even call it a commodity, a necessity, a defensive sector, which I would agree with. And as we already said, as the economy becomes more digitized and everything goes into e commerce, even banking, everything goes paperless today, so to speak, we're going to need an increase in budget spending for cybersecurity, especially as more and more companies describe potential cybersecurity attacks and things of that sort that will create a massive, massive demand for cybersecurity that is only getting started today.
That sounds like exactly the kind of rise in demand that growth investors are looking for. If that's you and you're looking for other stocks that have potential for some big future growth, check out our latest free premium report on the next 7 blockbuster stocks for growth investors. You can scan the QR code or click the link in the description of the video to get that free report on marketbeat.com right now. Well, let's move on to your third and final pick in this list of cybersecurity stocks. This last one, also a very popular name, and that's because of some very notable people buying this stock in the last 6 months.
Yeah, and the third name in this list is Palo Alto Networks. Now, if that name rings a bell with some investors, it's because Congresswoman Nancy Pelosi had been buying it all of 2024. Now, the latest purchase is reported between $1 million and $5 million of Palo Alto as of December 2024. Now, that might be speculation, that might be what some might call insider information. This pick might have all of the reward and none of the risk. Because differently than all the other picks in today's list, Palo Alto Networks might have been pricing in some of the worst case scenarios that never turned out to be true. Conversely, you see the S&P 500, as you said, pull back about 10% from recent highs. That means that the opposite is true there. The market was pricing in some better economic data, some better economic outlooks that just never realized, right? So when the market adjusts to the downside, capital will flow to the opposite end of that spectrum, which Palo Alto fits. Like I said, it's trading at 90% of 52-week highs, and that might mean that the better case or best case scenarios haven't really been reflected today. So 90% of 52-week highs, bullish price action, institutional buying, congressional buying. What more do you need to see for Palo Alto on top of all of the tailwinds that are coming in today in the cybersecurity space?
So, in your own investing, how do you look at maybe stocks that have more of a growth potential because the entry point is a little bit lower, or versus those companies that are more bullish, like Palo Alto, that are already on a strong growth path?
Well, I would say most investors could do better with a mix of both. There's not really a solution that one fits all, right? So if you're a momentum investor, then something like Palo Alto could be better suited for your personality, for your portfolio needs. Whereas something like Oracle or CrowdStrike, where they offer a much better risk to reward, might see some choppiness in the short term. But if your portfolio size, time frame, and capital requirements fit that short term choppiness, in return for guaranteeing or nearly guaranteeing a better long term return, then that's what works for you. Now, like I said, a mix of both is always the best way to go because you have the short term momentum of something like Palo Alto and the long term value add and value creation in something like CrowdStrike and Oracle.
Some really great advice for investors out there. We'd love to hear what you think. Are you looking into cybersecurity with the recent news about Google adding some momentum to the sector? And if you are you looking for the ones that have some more upside or the ones that have more momentum? Let us know what you think in the comments. Thanks for joining us, everyone. And as always, happy investing.